You're listening to the Real Estate Runway Podcast, powered by QUATTRO CAPITAL, where we are all about alternative business and investment strategies to help you amplify life and maximize wealth. Here's your host, the recovering engineer turned multifamily investor, Chad Sutton.
All right, Real Estate Runway family. Today we have a very special friend of mine, Miss Madhavi Jain. She is a fantastic individual who has a podcast called Think Outside the Stocks. And if you're into the book Go Giver, that was her first episode. Can you imagine having that author on your show for the first episode? Go check it out anywhere podcasts are listened to. And we're going to talk about her company, Think Outside the Stocks today, and just, how she has actually filled a niche by identifying a need for education and bridging the gap between real estate and alternative investing and the infinite banking concept, and how you can use the two of those together to both protect your wealth, give your dollar more than one job, and grow that dollar in a very risk-adjusted, a safety net, if you will, protected from creditors and things of that sort. So without further ado, let's get into that episode. Before we do, if you get any value out of our show, please leave us that 5-star review and thoughtful comment. That's the way we grow the show. Pay it forward. Help someone else like you find this information. We're also everywhere podcasts are listened to. So find us on Spotify, Apple Podcast, you name it, Stitcher, Amazon, places like that. And if you are on YouTube, if you're a YouTuber, check us out at the Real Estate Runway Podcast channel on YouTube and on TikTok at Real Estate Runway Podcast as well. If you'd like to apply to be on the show, we'd love to have you. Hit us at podcast@thequattroway.com or thequattroway.com/podcast. And if you want to reach out to us to give us a topic or something like that, hit us at podcast@thequattroway.com. Without further ado, let's get on to the episode. Here we go. All right. Real Estate Runway family, welcome to another episode of the Real Estate Runway Podcast. I'm your host, Chad Sutton, and I'm joined today with Madhavi Jain of Think Outside the Stocks. Fantastic company and podcast. If you haven't listened to it, get over there, download that sucker anywhere podcasts are found. You will not be sorry. Madhavi and I met at an event recently, didn't we? And I'm so excited that she agreed to come on the show. I think we're going to have a great episode today. So Madhavi, welcome to the show. How are you on this beautiful day?
Thank you so much, Chad. I'm doing great, and I'm doing great because I'm having a great conversation with you. So thank you so much for welcoming me on this show.
Absolutely. Well, I know you a little bit, but before we get into the education we're going to get into today, I'd love to hear a little bit of your story and just what led you to get into number one, the abundant-minded educator that you are today, and number two, investing in real estate and infinite banking strategies and things of that sort. How'd you get to where you are today?
Wow, it's a long journey, Chad, and thank you so much for asking that. But maybe listeners would know, I'm a first-generation immigrant in this country. I actually never, ever wanted to leave even my city, and I happened to come across the 7 seas, as we say, 9,000 miles away from my roots, with 2 suitcases and a couple of hundred converted dollars possibly. Don't even remember how many dollars we had with my husband. So we started our life from scratch here. We, went through the 2008 cycle of the scares of the job loss. And also with the home, we had significant problems with that too. But we moved from California to Austin, rebuilt ourselves in 2008. And 2015, actually, my corporate career, which by the way, I was working at that point with one of the top 5 consulting companies. So that was significant enough to come from that immigrant background, built an American dream, right? Working for top 5 consulting companies, kids and own house. So it felt like living a dream. Sometimes life happens and you just have to react to a life specifically. For me, again, in 2015, my corporate career came to a screeching halt because of my personal reasons, especially because of my health, which I actually still deal with it today. I couldn't just work. I just couldn't go to work and work. I laugh about it, but it's tremendous to see that the 6-figure earning income comes to a sudden drop, and suddenly you're like, okay, now I need to create my passive income in a reverse order. And you are in this world and we are in this world. We often see that people create their W-2 income in a parallel path and then leave the job or come down full time into real estate. I had to do it the other way around. So for me, that was tricky. My kids' education, my daughter was a middle schooler at that time. So her education was my biggest driver. And having burnt in real estate, it was difficult for me to step into real estate all over again. But hey, you got to create that alternate income, right? So I started very traditionally being a landlord. Why not? The IRS code call it's a passive income. So being, even I have a short-term rental, this is one unit. So that's where I started and soon realized there is no way this is passive. The tenant toilet and trash that we typically see as problems, that's when I realized that it's not passive. And in parallel paths, things just gets placed in your path in a way, and you just have to react to it, say yes to it, and be open to it. That's what happened with me with the syndication world. So the syndication path, first as a passive income, came to my life, and I was mind blown. I was mind blown with it that, and I was confused that, so you're trying to tell me that this person probably sitting next to me on the airport would have known about it, and I just didn't get to know about it. And that's why I didn't implement in my strategy. Really? That's the reason I didn't do it. It was still there and I didn't do it. So that kind of made me restless, not just for me, but for the community that I come from, right? The tech world, the first generation immigrant, that community I come from, saving every dollar, putting that effort into hard earned money, putting into the stock market whims. I just couldn't see that. At the same time, the infinite banking also came to my life. And infinite banking, as it's structured on a chassis of a life insurance. So there was a reluctance in my mind. I was very skeptical about it. So one thing which is working well, one thing which I'm skeptical about. And I'm like, okay, I need to figure out, go down to the bottom of this. And I did. I'm a very numbers person. My spreadsheets are my friends. I looked at the different scenarios with infinite banking and I was mind blown. I was like, oh my God, this really works. But now I have these two strategies, which is I'm thinking that the 20% strategy that can make 80% impact to somebody's life, including mine. And that's when I started thinking about forming Think Outside the Stocks. And that's my company. It's not just the outside the stocks opportunities, but that out of the box thinking. That's what I like to encourage people. So for me to look at those opportunities, bring those to my community, and not just bringing is enough, right? There's just so much scare in their mind because they don't understand it. They don't have that kind of time that we have. So educating them, putting that first foot forward with education first, without thinking about what that means to my business, right? That's essentially what I'm doing with Think Outside the Stocks. And I'm very driven with the Go Giver philosophy. I know you are too. And with that, I am just here on a mission. I'm just here on a mission to change a financial trajectory of one family at a time and thousands more to go. And that's a little bit about me and Think Outside the Stocks and what I'm trying to achieve.
Madhavi, thank you so much for that. And folks, I don't know how many books we've sold on the show, but if we could just say the number of times we've had Go Giver mentioned, that it is a fantastic book. If you haven't read it, find it in the show notes. It is just an incredible book about the abundant mindset. And look, if you're looking to receive something, give it, and you will receive it.
Absolutely.
But what I love about what you just did here, we have had episodes, folks, about the infinite banking concept, 3 or 4 of them, really good quality individuals who came on to discuss the concept. And we've had a lot of good episodes about investing in syndications and how that works and what it means for your cash flow and things to look for. But what we have a gem today because Madhavi is able to talk about both of them together as a strategy. And so I think as we get into the meat today, Madhavi, I'm excited to see, and you choose where we start because you're really the expert here, but I'd love to see how you and Think Outside the Stocks is able to play those two games together. And so if we need to start with one or the other, we can do that. But let's go that direction and see what value we can give to our listeners today.
Absolutely. And that is such a great approach, Chad, because this is really essential. This is what the gap I saw. People who were pro at doing the infinite banking system did not understand the real estate world. People who were in real estate were reluctant about infinite banking structure. And when I see that two of these things in the same plane, that's what the approach that I bring into my investors with Think Outside the Stocks. Because what happens in typical real estate world, we get too focused on the investment, the returns of the investment, the risk of the investment, the cash flow, IRRs, numbers, right? So I feel that's a very tunnel vision. That's a tunnel vision about what your money can grow and do it. And maybe going down further, they might think about, okay, can I create a financial freedom with this, now with that passive income? But they don't typically think beyond that. But I always say that it's like thinking like a frog in a pond and just looking at the water and the fish and the rock and the problems and the growth just that you can see. But we think of the stocks, and with these two strategies, I say that be like an eagle, step up a little bit. It's a completely different perception, the completely different perspective that you want to bring in. And it's not just about now passive income and financial freedom, but it's about growing, preserving, protecting, and passing your generational wealth. And with this twofold approach, and I think that's that 20% strategies which can impact that 80%. Why am I saying that changing the financial trajectory of one family at a time, right? This is that 2-degree path which can change now, that can change the flight path completely different. And that's what I'm on a mission for. Now, going back to this twofold approach, right? You can do one, you can do the other, or you can do both together. The both together is most powerful system, I think I would say. So with infinite banking, you don't need any accreditation. Anybody can do it. I have done it for 22 years with the first job, starting first salary, starting putting in there. I wish somebody had told me about it when I was in my 20s. So starting to build that an infinite banking system is based on, I think, two principles. One, first of all, that it's a saving strategy. And saving is that money that you're thinking about, your emergency money, your cash reserves. I call it a sleep well money. Essentially, having that in the bank account helps you sleep well. That if something happens to me tomorrow, a health emergency comes up, or job happens, then that money is there in the bank account. I can sustain some of the expenses for my family. So the foundation of our financial structure, I look at it as a pyramid structure. The foundation should be as concrete as our home foundation is. Should never budge, should never lose money. It's guaranteed growth. So that's principle number one about infinite banking system. And the second principle I think is very important is to understand the compounding growth. So once you have that compounding growth, it's a kind of snowball in a motion, right? Every rotation is getting bigger and better. But if it is interrupted, it's going to just expose there and get basically explode there. So that's the concept. If your infinite banking is building a snowball of wealth for you, now as an and asset, and I call it an and asset for a reason, because typically when you have money in savings, that is your investing money, for example, your opportunity dollars, you take that money physically out, it comes out, you put it into investment and you're growing, right? This is what the real estate chunk I'm talking about, parallel path, right? But with the infinite banking system, remember that uninterrupted compounding we talked about? You don't have to break that uninterrupted compounding. Leave that money be inside, grow compounded snowball. Take a leverage from somebody else, just like your home equity loan. Take a leverage from somebody else. It is a very small cost of that interest, and now invest in there. A, your money never came out, and B, the same dollar allowed you to invest into something powerful which can give you, say, 15%, 20% annualized returns. And again, these are risk managed returns, right? So that's what makes it super powerful to use it as an and asset, that you have the saving strategies in the place for your emergency money. You create opportunity dollars from it. You put it into the investments, help them grow at the same time as an asset. And as your cash flow and the returns from investment starts coming in, you make this foundation bigger and better. So it can help you create more opportunities for the money and kind of creating that velocity in the circular fashion, while as a framework, keeping it asset protected like the vault that you can pass to the next generation, worry-free, hassle-free, income tax-free, as a generational wealth. So that's where the grow, preserve, protect, pass your generational wealth kind of a framework comes together.
Grow, preserve, protect. I love the three pieces of that. And what you just eloquently did, Madhavi, is describe, okay, here's the simplest path. Forget it's life insurance. Just the thing that we're doing with banking is using a product that will allow us to put cash into it, let that cash grow, compounding uninterrupted based on the life insurance terms that it's set up with.
Right.
When you go to pull out of it, let's say you have a $100,000 policy, you want to pull out 50 grand to go invest in the deal. You're not taking your money out of the policy. You're taking it from the insurance company as a loan. And that's going to have a little cost, right? But you get to pay on your terms from what I remember. You then go invest it and in a property that ideally is making a lot more than the interest, right? Maybe call it 20% annualized, hopefully, when you're done with the deal. And so you have some cash flows. And let's say all that money comes back with friends in a couple of years. And so now let's say you have $100,000. You turn that 50 into 100. Awesome. So now you go repay that loan and you probably need to go buy another policy with the new 50 that you have, which gives you even more headroom and compounding. So it's like this snowball effect. Is that how I'm describing it? Is that right?
Yeah, absolutely. And sometimes when I try to structure it and looking at what you're trying to do with it, we create that kind of a minimum limit, medium, and maximum, right? So I try to create that room for you, wiggle room there, so that you don't have to immediately create a new policy just around the corner, right? So have that room for growth for you. That's essential. But you're spot on. You're spot on about how you are using that iterative state of the same money. It's rinse and repeat, rinse and repeat. So there's like a little bit discipline that's needed. It's not rocket science. It's not that complex, especially if you understand the real estate world part of it. It's not that complex. So that's what I like. People actually do get overwhelmed. And quite frequently, I ask them that if you have heard about the infinite banking concept, why haven't you implemented it? And most commonly, to your surprise, you will see I get answers back that, first of all, I don't understand it. It's not that simple, right? So education I'm really driven by that purpose that I want to educate people, and I have created several education modules around it. The second answer I get quite often is that I don't have time, which kind of very surprising to me, because this is that one, stitch in time that you put it in your strategy, your financial structure, and it's going to help you immensely in many different ways, right? And the third thing that life insurance, unfortunately, there are still people who hear the word life insurance and then they turn their head around. I was one of them too. I was super skeptical about it. But I would just say that keep an open mind, see what it can do for you, what can it build in your financial structure, and then make that decision, right? So other than it creating this and asset and multiple things for you, what is it possibly can do in your financial structure? Essentially, you're growing this money tax-free inside this system. When you want to access, you can take the cash out, but again, that's discipline to not interrupt that compounding. You're taking a leverage out, and because it's a leverage, it's not costing your taxes on top of it, right? So you're growing tax-free, you're accessing tax-free. You create your own limit, right? Something like a qualified plan, a 401k plan or something. It has an annual limit. You can only contribute so much to it, and we can withdraw from it only for a specific purpose after retirement, or like a 529 plan, only for the education. Now, this system you can create once, but now you can utilize it for multiple purposes. You can invest from it, use it as an and asset. You can now, when it comes time for your kids' education, use it as an education money. And unlike the 529 plans, which typically 529 plans, if you don't utilize it for education, you pay penalty, you pay taxes on that. This money, even if you save for education, you don't have to pay for penalties, or you don't have to pay for the taxes if you're accessing by leverage. But now you can utilize it for, say, for example, your retirement as a retirement income. Now, if you want to retire at 55, you can draw retirement income at 55. You don't have to wait for the retirement age. So look at that. We created the system once. We created it for multiple purposes. We can utilize it for any age, at any purposes, at any time that we want. And again, it's providing you that kind of a generational wealth to pass to the next generation. So that's essentially the crux of it. And while doing that, it is providing you asset protection. So most states, this life insurance money inside the policy, the creditors cannot get access to it, because this is not your money that's sitting in the bank account or brokerage account that they have access to if somebody sues you. This is inside the life insurance product, which is protected in most states. So that kind of creates that a vault almost for you to preserve and protect that money while it's growing.
Yeah, that you said so many good things there. And I think, how to come back into it. What a lot of people get confused about with the life insurance, and I was one of them, right? I heard life insurance. It's
Yeah.
like the old timey Northwestern Mutual guys trying to peddle you products, right? But if we could just divorce the term life insurance from it for a second and just say, this is a black box. It's just a thing you buy. And it's not
Right.
it could just as easily be some other product out there. Maybe it's just if you just think about it as a thing you buy, and yeah, it's
Right.
insurance and you get the insurance benefits, but it's the way we're using it. That's where I was wrapped around the axle for probably about a year before I finally started doing it.
Right.
I was like, I don't understand the policy. I don't understand how the policy works. I was like, that's not important. The policy that's a whole inner workings and expertise and all that. It's how you use the policy. And once I finally grasped that, okay, this is a storage tank. All it is a very special savings account so if we just get rid of the word life insurance and we put the word savings account on there, it's not an investment
Right.
either. It's a
Yeah.
savings account. And so it's okay. I plow cash into there. That cash grows uninterrupted at a much better interest rate than you're going to get in the bank, by the way. And then
Absolutely.
I don't have to take it out to use it. I borrow against it, which is interesting.
Right.
That makes it like an asset, like a house.
Yeah.
And
Yeah.
then I go take advantage of other areas I know how to make money. In this case, we talk about real estate here, but there's many other ways you could do it. Maybe you're in venture capital, private equity,
Yep.
you have a business, whatever it is,
Yep.
you can invest in that stuff, right? It's just an
Mhm.
incredible thing. And so let's go into, what Think Outside the Stocks does, because it sounds like you guys, your group actually helps people like first set this up and then go find where to place the money to grow it. So do you have, what's the
Absolutely.
process look like there? I'm super intrigued on that.
Nectar understands that raising capital is labor and time intensive, and we exist to solve that problem for you. Nectar provides fast, flexible, cash flow based financing for experienced rental owners and operators. Whether you need cash for acquiring properties, portfolios, or you simply need it for ROI generating renovations or expansion of staff, Nectar has your back. Grab your 12-month P&L with debt service and click the link in the show notes below to apply today.
Definitely. And but before we go ahead,
Yeah.
I really liked, I'm going to circle back what you just said.
Yeah.
It's like a black box, right? It's like a savings account. It's so important to look at it from that perspective. Something like a home that when you're buying that you're paying mortgages into it and your premium is very similar to that. Instead of you being in a rental property forever, which is AKA the term life insurance, where money is going down the drain and you are creating that system like a black box for you where it's incrementing in value in terms of the cash value. And not just that, your death benefit is also going up. So I have to insist and say that it is not your ordinary life insurance product, that black box product. It is built on that chassis, but it has to be structured in a correct way. It
Right.
cannot be your existing product. It's almost like you're going to the architecture in real estate and saying that build me a plan for a 3-bedroom and a 2-bath house. And now you go back when you're building is, oh my God, now I need 5 bedrooms. Can I build 5 bedrooms in this and 5 bathrooms per se? That's not going to happen. So it has to be structured right. Not many life insurance agents even understand it because, by the way, the commission structure gets slashed down when we create this kind of a particular structure. And I don't blame you because life insurance has that bad name because there is a lot, the index universal and the VULs, IULs get sold under the infinite banking name. That's not really the right product. The right product is with mutual companies existing over 150 years, some even 200 years. They're the one who are providing that consistent dividend year after year without significant change in it. And also there is a guarantees built into it. So this act like a bonds in your portfolio. And now is that you have built that, like you said, you can literally utilize it for anything you want. Real estate, venture capital, even in the stock market, if you want to take a leverage from it and invest into the stock market, this is a solid foundation. It's never going to budge. Even through Great Depression, people like Jesse Penny, for example, going through Great Depression didn't have payroll to sustain. He drew from his life insurance because that cash value did not budge. And that's what we are creating in your financial structure. Now, going a step forward with Think Outside the Stocks, marrying that to the investment, right? What do we do with Think Outside the Stocks? So Think Outside the Stocks, we initially started as a multifamily. I do the strategic partnership with various high quality investment teams, the syndication teams, and started with multifamily. I want to focus on for my investors risk managed returns, right? You also understand multifamily word significantly. The way it's risk managed, because hey, it's a place, it's a residence that we are creating for somebody, and we are making that community better for them. And it's not going to go away. It's not a kind of a want, but it's a need. And the rent growth has been going up, how the occupancy has been working. Tremendous things work for that particular area in real estate. Going down to what current environment that we have, multifamily is getting a little bit beat up, but there are opportunities also coming on the horizon. So diversification is the key that we focus on. Think Outside the Stocks is about outside of the stock market, not just the multifamily though. So commercial real estate investments, I recently had an industrial investment, which is a ground up construction. We also have ATM investments, these little cash machines, which can provide you sustainable, really heavy cash flow. So with Think Outside the Stocks, my mantra for my investors is within our diversified fund, which is a fund model, by the way, but it's not a blind pool, but investors can pick and choose their investments based on their requirement. So my mantra is your investments, your choice. Even as a part of the fund, you get all the advantages of a fund, but you pick and choose your investment still. It's not just a blind pool. So whether based where you are in your life, you might be a life point where you are accredited investor by income. You don't need a cash flow. You are interested in equity. Maybe you can choose something which is a ground up construction, which has no cash flow, but really heavy equity at the end. Or if you're looking at a blend that maybe in few years, I want to come out of this W2 job and start making it part-time, full-time, kind of retirement, then you can look at something which can create a cash flow and equity at the end, something like a multifamily or self-storage. Or you might be in a position that is, hey, I'm just going to go completely out, black out, corporate exit. And that cash flow is important. Something like an ATM, which just gives you really heavy cash flow, but no equity on a principal and back at the end, but 7 years of almost 24% cash on cash. So that's why this diversification and your choice is important, is based on your performance need. Now you can pick and choose your portfolio. So that's a big aspect of it. And for that, I partner with best-in-class partnerships. There's a lot of due diligence that go behind picking the right sponsor team, the partnership team. And not just that, but looking at their portfolio and this particular investment, there's a lot of due diligence that I go through. Again, education is the key for me. I educate the investors to start asking the right questions so they can do their own due diligence too. So not just that education, but bringing that high quality vetted investment in front of them so they can ask the right question and they can go with a comfort in their mind and not just in the gut feeling that, hey, this deal looks like a really good shiny numbers. I should just go in and I get that. You and me know that the shiny numbers are deceiving in a way. So that's essentially what Think Outside the Stocks do. And when you have the infinite banking system, now you can borrow from it and leverage it and go into the fund. But you don't have to do that if you just are not interested in the banking system. You can directly go to the fund. You can directly pick your investment, invest in there, create your performance plan. If you're not ready for the investments part of it and you are starting early and you want to build that opportunity dollar, create this saving, most efficient saving instrument that you can ever have. And then you will start building to the point where you have that investable dollars. So no matter who we serve, I try to help with whatever your conditions are, wherever you are in your life cycle, but trying to create that strategy for the investors that come to my life.
Wow. And this is incredible, folks. This is the first time I have found a person who truly understands both worlds and provides help in both worlds. Reach out to Madhavi. And I really think that, to her point, don't be afraid of the term infinite banking or life insurance. It's really a lot easier than we all make it out to be. And all the YouTube videos and books, and they try to go into how it works. And that's important, read it, but don't feel like you have to be an expert on it. before you start. Trust that people like me do it. I do it with my money. Madhavi does it with her money. And once it clicks, it's just, oh my gosh, I have it. And then, of course, there's the asset side. Wow, I could talk to you all day about this, Madhavi, but I know you have places to be and we got started a little bit late. So let's get into some questions real quick before we get off the show.
Absolutely.
What is your superpower?
Simplifying things is definitely my superpower. Education, that first foot forward, that just what's drive me, that go-giver philosophy, and adding that education as a value to tremendous amount of people is what drives me, that keeps me going. And complex concepts like this infinite banking or even syndication or how tax works and this, and that's essentially what I'm focused on. That taking that fear away can only be possible with the education, by simplifying it, creating that bigger picture, right, in their mind, that how these things are flowing in. What is the problem that we are trying to solve first before we even get to the nitty-gritty details and that analysis paralysis that you are just mentioning about. A lot of time people get focused on like the YouTube videos and how is it created and why is it created. You are not a practitioner. You don't need to get the level of details. You just need to understand and find somebody who can help you understand that and implement very strategically based on what you are wanting to do with it. So stop with that analysis paralysis. Just find somebody you can plug in. You feel comfortable doing that. And that simplifying that education is what I'm proud about. I've created several scenarios, spreadsheets, happy to walk people over that. And I think that's my superpower.
Okay, so let's go to the second question. So give me a little bit of dirt. Tell me the other side of the coin. What is your biggest mistake, whether it be life or business, and what did you learn from it?
Oh my God, Chad, thank you so much for asking that. And it takes me right back to beginning of my journey in real estate. When I started with that passive income, thinking rental real estate, being a landlord is a passive way of earning that passive income. So one of my rentals, this tenant, we had screened him and he was in place. He was providing that checks, rental checks on time. And sometimes he would be delayed a little bit and very diligently without us asking, he would put in the late payment as well. And we thought everything is going great, right? So there's no reason to doubt it. He had extended his lease once and there's something happened and I don't even remember why we visited. There was like some kind of leakage problem and they were like, oh, I think the floor is going to come down. And I'm like, oh my God, let's just look at what's going to happen. So they open the door and like it's a stench comes in, right? And like disaster. This is how you see on TV, the hoarders, and that's literally the house looked like a dumpster.
Oh gosh.
We were walking and he was literally picking up the like a cat litter in front of us from our steps, and the pet urine smell everywhere, and there are like more pets than they had. There was a senior citizen living in a room where there was no carpet, no pad. It's been completely pulled out to the foundation. And I can just begin to tell you, I get shivers even thinking about it. And I came back from it and I took bath 2 times. It literally felt like that. So we had to give them a notice and they had to come out of it. And my goodness, when they left the house, I had to put $5,000 just to take every piece of things out that they had left behind. This like literally wall to wall, garage wall, completely packed. Garage door stopped working because there were so many things in it.
Gosh.
Plus 15 more thousands to bring this house to back its glory so that it can be rented to another decent tenant again, all over again. And imagine $200, $300 was a cash flow and 20,000 was just spent for whatever disaster happened. So a lot of learning from there. And I'm of an opinion, again, that education, right? It's not just about what things work for you, but I'm also of an opinion that if I had my share of challenges and learning lessons and failures, I want somebody else to learn from it. Please don't make that mistake all over again. You don't have to reinvent that. Just learn from my mistakes.
My goodness. So Madhavi, is the lesson do a better job screening tenants, or landlording is not passive? What's the lesson there?
Landlording is great till you have that one tenant, one experience, one thing that happens. So that's essentially, we screened him well. I think it's just, you have that like a line, right? You don't want to encroach on their privacy too, right? So how many times are you going to go and do that walkthrough? So it's just create that system for yourself that you have to keep on checking. And then the one thing that you try to do it, and the second thing becomes loose. So it's everybody on their experience on their own, and it's a different scenario. You can create a lessons learned for that scenario, but then something else happens, right? So that's what it is.
And I think that's the interesting thing, folks. And what think outside the stocks and what Quattro Capital, the caliber of things we invest in, we're going to come across in rental real estate a hoarder every now and then. But we have 100 to 250 units. And so it's, yeah, it's frustrating. You got to pay to get it out. You got to renovate the unit. It's down for a little while, but it's like 1/200th of our income, right? So it's 1 or 2 every now and then. Absolutely. If you own a house and you've put everything you have into that house, look, single family rentals are great. My family owns single family rentals still, but we own a lot of them. And so we have room for that. But it's like, that's where you can get in trouble, I think, as a personal landlord, is you can't always withstand the cash hits that can come in real estate. And when you have one unit that goes offline, or 2 or 3, man, that's where you get hit. So thank you for sharing that. I bet that one still brings, you're probably going to go take a shower after this episode thinking about it.
I know, it's reminding me of that. It just gives me that shivers, but very well said. And that's why you and me are big proponent of passive income for especially the busy professionals who are working in their corporate world and they're growing their kids. That's enough on your plate already. You don't need another reason to stress it out. That this is why the syndication work really better. That you do that kind of upfront work of doing the due diligence about investment. But once you put in your money in there, it's a passive cash flow. It's a passive kind of appreciation at the end, right? The equity that comes back to you. So it really, you give that check and you get the periodic updates, periodic income in your bank accounts. And that's significant. Just to not have that stress. So that's something, a food for thought. If you haven't done it yet, Quattro Capital has that. Think Outside the Stocks offers that. Just see where you can trust and put that trust and start doing it. Take that first step somewhere.
I love that, Madhavi. And I think we have really, one question, but really 2 left. Here at Quattro, we focus on 4 pillars here, hence the name Quattro: people, property, profit, then philanthropy. And philanthropy is coming back and taking care of people. So I love to give my guests a chance to share their philanthropic heart, where you choose to put your time, efforts, and money helping the world. You never know. Sometimes people actually have gone and given on your behalf through the show. So what would that be for you?
Thank you so much for asking that. Such an important question. So I have 2 reasons that are very close to my heart. And one is Shankara Eye Foundation, which is basically working on the operations behind the vision. So that's one thing. And recently, I have also been a big proponent of Save Indian Farmers. And this is the farmers actually, they got burnt down so much under the pressure of the loan, and that particular year, the crops didn't do good. So they didn't had money to pay back, and that compounding interest that's piling on them, the opposite side of compounding that you don't want to have. And they actually started committing suicides. So they were a bout of suicides happening. I'm getting goosebumps just thinking about it. It's so close to my heart. So there is a Save Indian Farmers is founded here. Somebody becomes so restless about this situation, and they do a lot of work. They do a lot of work that money directly goes into actually good cause instead of having those overheads. So those 2 things are really close to my heart, and I can give you the links to post in the show notes if somebody wants to contribute to it.
Yes, please do that. And she has given me those links. So please scroll down in the show notes on whatever you're listening to this in, and those links will be right there for you to click and go give and contribute to those wonderful causes. Thank you for sharing that. And the last question is, how do we get in touch with you? How do we find Think Outside the Stocks and reach out and talk to Madhavi?
Absolutely. And I always love to talk to people, getting to know their goals, their objectives, what we can do with them. Just build that small step, build that path for them. So Think Outside the Stocks, that's me, thinkoutsideTheStocks.com. That's my website. You can go on my website, schedule a call with me. I have a bunch of material available for there. There's membership areas, there's blogs and stuff like that. I also have a podcast, Think Outside the Stocks, and that is focused on that growing, preserving, protecting, passing your generational wealth. So it's not just a focus on one particular asset class or multifamily or single family, but it does talk about that passive income generation. It also talks about infinite banking. We get industry experts and we ask them, how do they think outside the stocks and how do they create their family vault for growing, preserving, protecting, and passing it. So if you want to listen to that's there as well. I know you have a great podcast yourself, Chad, and I'm just so happy to be here. But if you want to get in touch and start working on the infinite banking strategy, you could just you go to bit.ly infinite call, and that's where you can schedule that free strategy session with me. I would love to give you that free strategy session. It's an hour session, and we can just start somewhere building that right structure for you, your financial structure.
I love that, folks. And as we always say, just scroll down in the show notes, whether you're on YouTube, whether you're on TikTok, whether you're on all the places podcasts are, this is right there for you in the show notes. Madhavi, thank you so much for coming on, sharing some of your education, your knowledge, and you just have such a giving heart. I really appreciate everything you're doing to elevate the investors out there. So thank you for coming on. Wonderful having you. I hope to have you back on soon.
Absolutely. Thank you so much for having me. I had such a great, candid conversation with you, and what you are doing, it's incredible. I love to see that you are putting that education as a first step forward too. Not quite often I come across people like me. So all reflection, thank you so much for being what you are and for having me on your show. It's an honor.
Do you manage multiple legal entities? Is your data scattered across various unsecure systems? Is your team spending too much time on manual processes? Do you struggle to meet reporting deadlines? Simplify entity management and compliance with Entity Keeper. Entity Keeper helps easily manage entities, build and maintain complex organizational charts, and track filing deadlines, all in one secure, cloud-based platform. And with automated alerts and centralized document storage, you'll stay 2 steps ahead of compliance deadlines. Click the link in the show notes to learn more and book a demo.
All right, folks, I hope you got as much out of that episode as I did. There's just a lot of things when you finally get the concept of listening to the infinite banking structure and get away from the idea that it's life insurance, and then you also start thinking about how to use it in your real estate investing world, it all starts to make sense. So this is an advanced topics episode. If you haven't yet done it, go back and listen to many of our earlier episodes that have infinite banking in the title. A great one was with David Zapata a few months ago, and we have several more than that. One with Harper Jones, maybe 2 with Harper Jones from Create Tailwind. That's going to help you get baseline understanding of the infinite banking concept. And then you start to layer in the concepts of real estate investing and how to use them together. So super powerful stuff. I do it personally. Madhavi does it personally. We both love to answer your questions if you have them. So if you have any questions related to this, you can email us at podcast@thequattro.way. We'd be happy to answer them for you and connect you with the right people on our team. And look, if you got any value out of the show, love it if you would pay it forward, leave us that 5-star review and thoughtful comment. That's the way this show gets bigger. That's the way you've probably heard about it. Pay it forward, help 2 or 3 other people find this episode so that they can also learn and apply these lessons. If you want to apply to be on the show, hit us at thequattroway.com/podcast as well. So loved having you today. Until next time, this has been the episode of the Real Estate Runway Podcast. Over and out.
We hope this episode was insightful and brought value to your day. If so, please be awesome and leave us a 5-star review. Find out how Team Quattro can help you at thequattroway.com. Until next time, this is the Real Estate Runway Podcast.